Hello and welcome to another episode of the Digi-Tools and Accrual World podcast, brought to you by the Digital Disruptors. Our main sponsor this week is Free Agent, and they are doing a whole bunch of exciting things. I think they've released more features this year in 2025 than any other product that we're aware of, and I'm sure 2026 is going to bring even more. And I'm joined by Lee, who you don't normally see in front of the camera. So I think you've managed to get out in front of the camera maybe once or twice with Indy, I think, if that's right.
Yeah, a couple of weeks ago.
Yeah. That's because Ryan and I couldn't be bothered turning up, right? That's probably about right, isn't it?
Filled in for you. Yeah, hopefully filled the boots okay for you.
Well, I think so. I watched it back and it was pretty good. I was impressed. You hit the mark in terms of being insightful, and you kept Indy under control, because that's the main thing. Because you know what she's like after she's had a few drinks.
After a couple of drinks, what time do you think we record?
Well, it doesn't matter for you.
It's 5 o'clock.
Sorry, I couldn't resist. But at least you're festive today, Indy.
Unlike my co-hosts here, you've chosen to be very bar humbug, the lot of you. I was counting on you, Lee, to bring the festive
joy.
cheer. Yeah.
If I'd known, if someone had communicated and said, bring your festive gear, then I would have done.
It's Christmas. It's what we do at Christmas.
He's always in mountaineering stuff, though, and he did come on
The first time that I have never seen him being the walking advert, and instead running to Ryan on the train. Only spotted him because he was a giant billboard for 3 different brands. What is it today? No, actually 4 different brands. Digital Transformers Group, Wallex, Libio, and SimPro.
Nice. Wow, that's good work.
So just so anyone that's listening, there is a gap in the market for swag. And we spotted that the gap in the market is in the jeans. Because if there was a branded pair of jeans, then Ryan will wear them.
Plus, Ryan stuck with his, washed jeans from the 1990s, so he needs something remotely sort of fashionable.
They started off as normal jeans. I just worn them so much.
Is that right? Yeah.
So what we're saying is there's a real opportunity here for somebody to have Ryan as a giant billboard for the next 20 years.
For jeans.
30 years, maybe.
I mean, it depends if you want to have your brand plastered across my buttocks, though. That's the bit that...
Do they have to do it across the buttocks?
It's the only way I'm going to wear it.
He likes to shake his booty.
Right, real estate.
I mean, you can also tattoo his head as well if you wanted to.
I mean, that comes as a higher premium.
Yeah. I think that should be done. I mean, you can always laser it off. You could do like a 12-month
cycle.
Plan. Yeah.
It's kind of like that lifetime subscription you gave to our early sponsors, isn't it?
It's the same thing.
A little bit like the tax calc pricing, right?
I wrote that.
That's an accounting pun right there.
It was. Well, look, it's great to have us all together. But we should probably talk about something insightful while we're here. So should
we defer to Lee then?
Probably. Thank goodness Lee is here. But should we crack on with some app news?
So I'll kick off this week, and it seems fitting to revisit a subject that we spoke about a couple of weeks ago, which was the updates to the Xero API. So there's been a lot of backlash in the last couple of weeks, needless to say. Some of it has actually been interesting. A couple of brands have got in touch, and they've actually spoken about the benefit of how this could work in their favour, given that they are actually putting data into Xero, and they are capturing richer data at the source of maybe the transaction, or say, for example, in e-commerce, or even like we've seen with our good friend Nikolai from Genesis. And they're commenting on the fact that there's a real opportunity here, given that they actually are pushing to Xero. What's going to be really interesting is if these changes in the end become a source of contention for Xero, given that they were trying to stop other people from training models or using that data in any way for AI automation. If Xero themselves end up becoming the one that is also forbidden from using it in training models and using it for AI automation, given that there are people pushing data into their platform. What do we all think about that?
I think it's interesting that if we take it that this is going to have a less of an impact because they're pushing data in, because conversely to that, Dex and Stephen Edison jumped in saying that although they are pushing data in, part of that and making sure it's correct is to verify it, which you're then sucking data out to check that it's gone in the right way. So if you are doing that correctly and you're, got those checks and balances in place, you should still be interacting with the API in a way that you would get charged for it. I would assume that's what they're doing at Genesis. I don't know enough about the technical side. But I'd guess they'd still be impacted. But definitely, there's two big controversies that I've seen. One is the pricing for journals, and the other one is the AI training, and who owns the data. And I think there's a lot of concern in that Xero are trying to state that they own it, they're controlling it, whereas until this point, they've always argued quite strongly that this is the end user, the client, not the accountant's data, but the client's data. And it's a very sticky position they're putting themselves in.
I think the challenge around the AI bit in particular is that you've got kind of two issues here. One is that Xero are saying that you, the business owner who is using our product, can't take your data back out of the system and use it to train a model. And you may be doing that for any number of things. It might not be necessarily accounting related. It could be doing it for the purposes, say, reporting. You could be doing it just for validation purposes, like we talked about. And there's 1,000,001 different sort of potential use cases you've got here. Whilst clearly at the same time, Xero are learning from the data that we're putting into these products because they've got JAX sitting in there. And, we've got this new functionality around reconciliations, which is built and designed to learn on the data. So I guess the question then is should businesses be able to go back to Xero and say, hey, I don't want you to use my data to train your models? That's the sort of the dichotomy that you've got here is you've got no option for a business to say to Xero, don't use my data to do this. But Xero are saying, oh, you can't use your own data if you extract it back from Xero to do this yourself. And that's a big challenge. I think the other thing that, on the restrictions that they've placed, which hasn't really caught too much sort of commentary, is the restrictions around the UI. If you look at the stuff that David Tuck's doing, and actually going back to talking about Dext as well, they have built products which add on to the UI and UX of Xero itself by adding in sort of like some additional functionality in the browser, which enhances the product in a way that Xero were probably never going to build. And that's also now restricted with these API changes. And that takes away a whole bunch of potential functionality in the future because, we looked at some other products and we'd actually built some products which were designed to sort of sit within Xero and then, create pop-ups which allowed you to make adjustments. And there's a bunch of functionality in Xero which is not present, things like some VAT restrictions, some stuff around charities and some other stuff that would be really, really valuable to be in there. And so for me, I feel like the onus is now on Xero to replicate either that pre-existing functionality that Dext or Mayday or someone else has built to make that available in the product because they're going to take that away, or there's going to be some other additional workaround to be able to have that functionality still remain.
You are the master of the conjoined sentence, because I was about to say before you move on from that point, the models and relating to JAX for a moment, that though the data is important and that it's great to see JAX is working correctly, the AI element of that is not necessarily needed. Free Agent were doing that type of reconciliation, a year earlier, 2 years earlier?
I think 7 years ago.
7 years.
Yeah,
wow,
a long time.
7 years. So there is value in obviously Xero then being able to improve their own product through using JAX.
Looking at this from another angle, the concept of a separation between the ownership of data and the access to the data isn't actually a new thing. So we had to tackle this a long time ago, way back even when I started at Xero, when we had the conversations around, well, if I'm the subscriber for a client, what if they want the data? What if they want to move their subscription and maybe they've got fees outstanding? And so the policy always was we take the instructions from the subscriber, irrespective of whether it's the client's data in there. So there is that concept of the separation, and this is just a really interesting the perspective or outcome of that sort of philosophy of having those two things separate, I think.
This is a common problem that you and I would come across, right, Ryan, is like the access to data, whether it's in Xero or in an ERP or in another accounting system. We know that we've had clients that have been held to ransom basically when they wanted to move systems and transfer between one accounting system to another, and the incumbent product has basically said, we're going to keep your data behind a paywall of some description, and if you want to access it, you've got to pay us X amount, and that could be many thousands of pounds in some instances. I actually wonder if more fundamentally there's potentially a conversation to be had here where we have legislation around things like open banking now, to access as a business or a personal individual. I've got consistent quantitative access to my banking data. I wonder if we should have similar kind of fundamental structures around accounting data itself and other business related data, such that there is a sort of a set standard, because that's the problem that we've got at the moment, is there isn't this kind of standardization. And so it does allow businesses, and I'm not kind of calling out Xero specifically, but it does allow businesses to kind of put almost your data behind a paywall when fundamentally it's your data. And I understand that there's a cost to keeping hold of that data. There's a cost to providing them relevant security and a whole bunch of other things. So it's not that we shouldn't necessarily pay, but maybe what we should be doing is paying when we utilize the product. And then when we get to a point where effectively it's an archive, that should diminish significantly, but we don't see that.
Yeah, I think, look, this is definitely going to keep rolling on. This is not going away. I think to some extent, I think Xero would hope that there was a big blast, people are frustrated, and then it disappears. But there's a big shift, and part of that shift is moving away from inclusivity, allowing people to, do things in a much more flexible way. And another, I guess, linked shift to this is that there's been the announcement that Alex von Schirmeister is leaving Xero at the end of this year. And from all the discussions I've had with him over the years, he has been a champion of inclusivity, like within the workplace in Xero, I guess within the way they interact with their partners. And I guess his departure, not saying it's linked in any way to this API debacle, but I think just once again highlights another move away from potentially inclusivity at Xero. And hopefully someone comes in, actually picks up his mantle and continues it, because I think he's been a great leader in Xero for a number of years.
Obviously, Alex came in and he followed Gary from a sort of UK MD point of view, and obviously that sort of expanded out into broader territories. But I guess, and this is not me sort of criticizing Alex per se, but like if I was to play devil's advocate, like what impact has Alex had over the last few years in terms of his tenure? Because Xero as a product has been relatively flat. Yes, they've, brought in MTD and some other bits and pieces. We've now finally seen things like Jax and stuff, but that's not really within his particular remix. That's a product issue. Yeah. And, there has been no utilization, as far as I'm concerned, of like Alex's experience and skills in the broader European EMEA markets to kind of look to expand Xero into those places. And so I guess, that's what I'm asking is like, what kind of impact has he really had?
That's a bit harsh, I think. I would say that. I don't know if that's totally fair, because I don't know if we've tracked other countries as well in terms of Xero adoption, but for sure in the UK and in general, from everything that we've kind of observed, Xero is a very lean team in terms of how it operates in the UK, from a governance, from a corporate, and from a pushing the agenda in Whitehall. It's been fairly lean in terms of how they operate at that level. And Alex himself has been very present to champion the small business corner and the different agendas that should be progressed as a result of what they understand from their users within Xero. We know the European market is complex when it comes to GL. So, it's almost in a way, you've said it, but I'm thinking, but we already know that it's very difficult to penetrate for a number of different reasons. The softwares, say, for example, that are in the Nordics, completely different in terms of how the accountant operates there. And don't even get me started on Spain, because it is just like the Wild West. So I just, I don't know. I think it's a little bit difficult for one person to even roll out a software across Europe when most of those that are in Europe, like I'm thinking of a Penny Lane that's in France, has not been able to do that themselves. Even Sage has struggled to have that consistency across different jurisdictions. Yeah. One man who, for me, was a very big champion of small business, champion of inclusivity, as Ryan said, very good in terms of like running along with a team that he had inherited. And at the time he inherited it, there was such a big hole left by Gary Turner. He did really well to get to grassroots with all the accountants in the market and build. So I guess if I reframe my question, then is like, did we have the wrong expectations maybe then of Alex when he came in?
You did.
Really?
Well, I mean, I just, because if his mantle was sort of business as usual, I mean, he's achieved that, right?
Well,
and he's sort of, Xero's continued to be successful here.
He steadied a ship.
But I guess, what I'm saying is is that what we wanted, or should we have expected it more? Because I totally agree with, whenever we've spoken to him, whenever I've met him personally and stuff, he's been very articulate, he's been very good. He's spoken a lot about the challenges that small businesses here face. He's spoken a huge amount about, like you said, the inclusivity things and other stuff. I just wonder, like, could he potentially, maybe rather than should he, but could he potentially have had a bigger impact?
Let me, I guess, go and put the flip of what you've said. So at the same time, a similar time he came in, Xero pivoted from growth to profitability. That was their big drive. So as Indy said, they're kind of, the purse strings are now reined in. He's not got as much to utilize internally. Plus, they went through an internal, completely redesign of the product. All the back end, we didn't see it. It was frustrating. Yeah. So he had no control over any of that. But Xero continued to grow, continued to be the dominant force in the UK. And I guess I would argue that the others around haven't really come and eroded their client base. So what has he done? He has enabled that transition to happen effectively with the team members and empowering them, and probably in the same way, keeping their morale up in a period where you've had the likes of us going, come on, Xero, do stuff. So I think it's not had the same massive impact that Gary did, like all the time. Product changes.
Probably was never going to.
No, it wasn't. No. But he's not had a fallout in the same way as like Alex Ferguson leaving Man United. So if I'm going to link it to football in some way, it's not been that. It's not been the disaster that followed that.
I think there's two other elements to consider here as well. Is that one is that when Xero are a challenger, they can just do interesting random stuff, and because you're trying to fight to get into the market and get attention, as soon as you get to a tipping point where you've got an established base, you need to start to calm down a little bit. You can't take as many risks. So that's why we see that. The other element is that around that transition time, as Gary was leaving us and as Alex was coming in, it was a big project internally in Xero where a lot of the regional decision-making power was actually then centralised back to Australia and New Zealand, to the head office there. And I don't know this, I've worked under Gary but not under Alex. It may well be that he probably didn't have as many options open to him as maybe some of his predecessors had.
Yeah, makes sense.
I guess to wrap that up, we wish Alex well. Hopefully he stays in some way in this space. He has not announced what he's doing.
Actually, he has.
Has he?
He has announced it.
Oh,
I was about to say, before you wrap up, shall we just at least mention the brand that he's going to?
This is why I come on this show to learn.
It's Nomentia? How do you want to say it?
Don't leave it to me.
I tell you what, let's hand it over to our pronunciation specialist.
I think it's called Nomentia.
It's a treasury. I think a treasury technology, treasury management.
Okay.
So it'd be really interesting to see how that evolves, because I think there's a real demand here for this at the moment in terms of treasury agents and how they can also link to the creation of separate bank accounts, the movement of monies, the distribution of that money into maybe interest generating accounts, making that a little bit more facilitated. So it sounds like he's going to somewhere that's going to be super relevant to our accounting market in the next couple of years, I'd say.
Let's see a rebrand from Nomentia to Noment AI.
Oh, he's here all day.
All right, what else have we got?
Terrible. Well, let me bring you the latest and greatest updates from Xero that we haven't spoken about yet, which is all about MTD. It's actually quite a quick one. It's relatively straightforward. So one of the things that they've just dropped into the product is if you are both a sole trader and a landlord, one of the challenges that Xero had or have currently, but it's about to launch into beta testing, was that you had to have two separate subscriptions, which obviously isn't great because that's doubling the cost of it. You can now combine those into one subscription, and you can do all of the required MTD filings and stuff, so the quarterly ones and the end of year one, all under one roof now, which is very exciting. So that's kind of it.
That bringing them back to parity with Free Agent. So where Free Agent have been leading the charge, and Xero catching up.
Oh my Christ!
Yeah.
Just doing so much of this.
Your Christ!
Back to Free Agent. Right.
Oh, the episode sponsor.
No, they are the episode sponsor. It's just I can't believe that we've managed to link that.
I can link anything.
Here we go. Let's see if you can link Mollie in. This is what I'm looking for.
Oh, no.
The cogs are whirring. I don't think I'm going to find a way.
Before you feel long.
But speaking of long-standing British tech companies, GoCardless has been acquired by Mollie, the Dutch fintech. And the consideration for that is about 1.1 billion, which interestingly is a bit of a step down from the 2.1 billion I think it was valued at a couple of years ago. Wow. Seems like a really interesting combined solution. I think there's a couple of elements there. Mollie, for anyone that's not familiar with them, is an accounts receivable solution. It would compete with something like maybe a combination between Cresco and Stripe, something like that. It's card payments and all that sort of stuff. But obviously they don't have direct debit, which they now do through GoCardless. Not much of a footprint in the UK from Mollie. I've not really come across them before. They weren't at Accountex, so maybe part of this deal is them getting that footprint and entering the UK market with a good chunk of customers. I'm not sure what the reaction from accountants is going to be on this, because GoCardless is embedded into a lot of workflows for a lot of small practices.
Yep.
And as we know, when things get acquired, people tend to get a bit nervous about continuity of service and things like that. So I'm not sure how that's going to play. I don't know if you guys have heard any feedback on that.
No, but what I would say is that I think that space is being eroded by Adfin anyway. So they've come in, disrupted the market that I guess GoCardless was dominating on the direct debit side. But now, because they can also take card payments, they can take direct bank transfers, and they've got the credit control that's being kind of rolled out over the next couple of months, that I think you will start to see a transition from GoCardless to Adfin.
Hang on a minute, though. So Mollie also does receivables, but if I'm not mistaken, it also is in lending.
Yes.
So where I think GoCardless were trying to supplement some of these things like receivables and lending, and I think it had lent on Pipe, which had been set up by Luke Voiles. God, I'm going like, here's a tenuous links everywhere.
Yeah.
So Luke Voiles, he used to be in charge at QuickBooks, and he was the one that set up QuickBooks Capital in the US predominantly. So they did a lot of lending to businesses through QuickBooks. Left obviously there, and then set up Pipe, who are maybe in a little of had a bit of a ropey last few quarters by the look of it. Let a lot of people go. So I think there's going to be some changes that happens between GoCardless and Pipe thanks to this acquisition, which means that suddenly GoCardless is also now adding lending and accounts receivable credit control to its toolkit, to its armory. So actually, maybe that is, a great opportunity, and that they've then seen a natural synergy in someone that is much bigger than them. Great success story. Hate losing any UK business, but happy to lose it to our European partners, as opposed to it flying away to the US or another superpower.
I guess there's an opportunity here for Mollie combined with GoCardless maybe to address one thing that did put off a few businesses and a few accountants, and kind of open the door to the likes of Adfin and Mimo and others to kind of compete with them, which is the pricing. Yeah. That was kind of the trigger a few years ago when GoCardless did up their pricing, that kind of, like I say, made it possible for others to kind of sneak in and like compete with them a little bit more, because ultimately at one point they were the monopoly really for this kind of service. And so maybe this combined entity can actually shave a little bit of money out of this, if they're looking at cost savings, but they can also work on the pricing model. And if they've got lending and other stuff in the background, they've got other revenue generation opportunities which maybe would allow them to do that.
Have you seen post-acquisition many businesses reducing their pricing?
Not directly in the tech world, but I mean, this is a finance product, and there's a little bit more sort of pressure on pricing, right, from finance.
100%. I mean, come on, you can't compare an accounting technology to what was GoCardless is doing. I know accountants use it, but it's not the same as having a SaaS subscription. It's ultimately a financing play here. Yeah. And that means that, it is a race to the bottom with payments. You always have to chip, and then you go low, and then before you know it, you're almost going bust. Yeah. So the fact is that putting lending into this is a smart play. You speed up the cash cycles, make it quicker for businesses to get paid, and therefore they don't really mind them paying an extra few pence on that.
Okay, let's move on then. So there's been a little bit of research around AI agents, and then there's also some additional commentary connected to this on Copilot, which I'll come back to because, oh God, Copilot, Microsoft Copilot, what a product. So the research that's been done around AI agents, and in this instance, what they're talking about really is the stuff that has been brought into both Gemini, Claude, ChatGPT as well, which is this concept of being able to give some instructions to an agent that goes off to a browser window and then starts to navigate through that browser and do particular things for you. Now, one of the first things that I tried to do with this was go to my favorite wine shop and order a bottle of wine, and I got shut down immediately because they won't order booze for you. So I was immediately disappointed. And it seems that actually other users of this technology are also disappointed because they're finding that the success rate or the failure rate of these is too high insofar as, they're getting very dissatisfactory kind of outputs when they're getting agents to do particular tasks. And this could be upwards of like 80% in terms of the failure rate. Now, I'm not entirely surprised with that, but equally at the same time, I've had some relative success with using agents. I was doing some work in Caseware Cloud a while back, and it was basically about translating some information that was in Excel in a kind of a framework and putting that into Caseware to kind of build around that framework. And whilst it took quite a long time to sort of get it working and get it right, once I had got it working, got it right, it whizzed through a whole bunch of work, and it took probably about a day between me interacting with the agent and then the agent doing the work and going back and forth to get it done. But I reckon if I'd done it myself manually, it would have taken about 2 days. I saved 50% of my time approximately. There's a little bit of variability in that. So I was quite satisfied with that. But I just don't think that agents per se, in that kind of sense, have really taken off. And I just think maybe that we're struggling to find the use cases, or there's too many challenges, because obviously when you try and get a product to log into a website and do something, it's you have to then wait for the user to interact with the login pages and two-factor authentication. So, which is good from a security point of view, but maybe throws up too many barriers for this technology to be fully used.
Before you launch into slating Copilot, I think there's something that we should also pick up on, is that I've seen that you and I have jumped into some posts on LinkedIn recently where people have been interacting with AI, but in completely the wrong structure and feeding back how it's failed.
Yep.
And I think the problem is that everyone's going, you should be using AI, and they're going off and using it on tasks that are just not the right use cases for AI at all. So it comes back to education.
Yeah.
And the problem we've got out there is because it's so new that the, education material and the training on how to use it effectively in the right way is just not out there and not structured enough so that people will go out and are getting those positive feedback loops because they're going and doing something that is just wrong. They ultimately is wrong. They should not be using AI for that.
I mean, I've done, with my new role, but also previously, I've done quite a lot of consulting with firms. And I think one of the things that comes about as a consequence of this is actually many firms don't have an AI sort of strategy. And I'm not saying that they need to sit down and write, a 12-page document about what they're going to do with AI. But what
ChatGPT to do it.
Yeah, well, exactly. Yeah, you could do that for sure. But what I'm really sort of saying is just have it doesn't even have to be particularly long. It's really just about having a vision and then having a bit of a framework to work to. Because in my experience, what typically happens is firms either say, no, we're not going to use AI and just sort of cut down all opportunities. Or they say, yes, we want to do this, but we don't really know how to do it. So we're going to give everyone a ChatGPT license or a Copilot license or something, and then just say, go and experiment with no kind of structure and no framework around that. And then they kind of wonder why that's not successful. And I think going back to the point that you were making, Ryan, is I think what we're starting to see is it almost feels like there's a bit of an agenda insofar as I think people have this misconceived idea that large language models are going to replace all of the technology that we have and that we use. Fundamentally, that's not going to be the case. This is an additional layer in the technology that we use, and there's absolutely no reason why the tax return technology, the accounts technology that we have is necessarily going to be replaced. It's going to be transformed, and maybe the way that we interact with it is going to be transformed, and maybe this is where agents should be better or could be better. The fact that we have these posts from people saying, oh, I used ChatGPT to try and calculate my tax liability and it got all the maths wrong. Well, of course it did. It's a large language model. It's not a calculator. It's not a tax engine. It's not a calculation engine. It's almost always going to get this wrong. It may get it right sometimes, but it's not going to get it right consistently. But that's not what we should be using a large language model for. But what you could say is if you looked at a tax process like that, you could say, hey, I've got this information that I'm able to extract, and I could use an LLM to do that, or I could use OCR or something else. I can take that, I can put it into my tax software, and I could use an agent, or I could use RPA or something else to do that. But when I get that information back, this is where an LLM really flies, because it can give me a whole bunch of context around the tax return, the information that we provided, some other knowledge and information maybe we provide about the business, and all of a sudden it can say, hey, have you thought about doing this? You might have misclaimed this opportunity, or you might have misclaimed this allowance or missed this opportunity for planning or something else. That is where a large language model really adds power to the whole process. But this is the problem, is people just don't have this conception, it seems, in their head about what the working flows should be and how we should layer in LLMs into the process.
I think we have to evolve our thinking on this, don't we? We all have to evolve in the sense that, and I've said it before, so I'll say it again, as it's Christmas. Excel, when Excel came, that was going to be the death of the accountants, right? Then you had the accounting softwares that have come with the tax preparation and the GLs and the whatnot, that was going to be the death of the accountants as well.
Yeah. True.
And then, we've had even more apps that have come into the accounting market space. So apparently they were all going to be the death of the accountants. Then we've got AI. We had open banking in the data scene for a while. That was, that was going to explode. And then also, open banking was going to revolutionize all of the tech companies that would then replace the accountant's role as well.
That's my favorite topic.
It was.
So what I'm saying is it's another incarnation of the same story.
Yeah.
That AI is going to enhance once more everything that is within the wheelhouse. But when it comes down to it, and I use an analogy from something else, like really need the knowledge, you really need to have a sparring partner with you. 100% that helps. If you can change one view of seeing something and turn it laterally and look at it another way, it allows you to slice through as the expert to work with something that's in front of you, whatever that might be. And I think that that's the bit that people need to remember or see it as. It's a positioning thing. This is your partner, this is your teammate.
I do agree with that, but I do think that's a short to medium term view, because what I've been talking to firms about more recently is like, if you look around the world, whether it's here in the UK, whether it's in the US, whether it's in Europe, tax technology is probably the area that's got the most focus at the moment. And that makes complete sense, because a lot of that back and forth is really about either chasing information, or it's just transposing something in a PDF into a piece of software over here, which doesn't create value. But the thing is, at the moment, we can charge quite high value for that, because it's the preserve of accountants, because other people don't necessarily have access to that technology, or it sits behind a paywall which is too big for people to access. But what I've been sort of saying to people is like, what happens when the $1,000, I'm going to sort of use US terms here, but the $1,000 tax return becomes a $100 tax return? How are accounting firms going to react to that? Because you then need to be really focused on your process and how you do that. It doesn't have to be necessarily thinking this about AI, but you need to be like nailed down on that. But the additional thing that comes with that is that we kind of always say, oh, well, we can still get the value back in advice. Will we still be able to get value back in advice, or will it become a point where actually, rather than being advisors, we just become confirmers? Because people will come to us and say, hey, I've gone off and I've looked at this and I've done my research, and ChatGPT or BlueJ or something else, whatever I've had access to, has given me this information. Is it right? And that goes from being a 1 hour piece of research or a whole day's piece of research to a 10-minute read through the document, maybe clarify a few of the references, and that's it.
Just a higher charge out rate, mate. So that's how we overcome it, right?
Yeah.
Well, I think we're a bit of a way off that, actually, because after 3 years of unprecedented AI growth, the latest data actually shows that from a Census Bureau survey, The Economist estimated the percentage of Americans using AI to produce goods and services at large companies rang in at 11% in October. And that was down from 12% the month before. So I think that's quite shocking. Back in March, the survey also picked up the number of businesses with 100 to 249 employees reported not using AI within the last 2 weeks, and that stood at 74.1%. That's huge. It's a steady uptick in no as the result, and it's culminated in, quite a dreadful, I guess they call it a dreadful stat in the latest poll. 81.4% not really using AI in the roles, in the jobs, in how they report on this. And this is in an industry that's expected to spend $5 trillion in energy and AI infrastructure between now and 2030. Staggering. And two things from this. It's obviously showing that this AI thing, God, I make myself sound like such a boomer. This AI thing.
What is this AI thing?
It's showing there's a bubble here, given that we know that GPT has been quite disappointing. ChatGPT, OpenAI's GPT 5.2 was quite disappointing, I think. Gemini launched theirs at 3. And I think that the numbers of adoption, though, are showing that the AI at the workplace, in the workplace, usage month to month has fallen to 37%. And that's crazy.
I think we've already hit the dip, haven't we, to some extent? So there's always the hype. You get the hype, you get the peak of everyone going, oh, we need to do something with AI. And then we quickly realise that it doesn't do everything we want it to do, which we've been talking about. And then it dips down and people are like, no, there's nothing that we want to do here. We're not interested. And then the proper use cases come through, which we're predicting in 2026, and then it picks up again. So I'm not that surprised we're hitting a dip. It's how deep that dip goes and how much an effect on, I guess, the economy that can have because of the amount of investment that's gone in. Let's hope it's very small.
But our economy hasn't spent that much.
Oh, no, not the UK.
So we're okay. It will just be all of the other players out there, and especially those businesses that have raised money and then used all of the AI players in the US or in China or where else to build their products. These are AI businesses that are in the UK. So I guess those businesses may be affected with this. It's our teaching opportunity. 2026, we'll teach it in, and we'll absolutely go harder. I think, Lee, you're talking about another tech company that's embedding AI into it. So we're going to start doing this a little bit more. And I think that we can maybe try and help bring horses to water that is pure.
Yeah, absolutely. So Digit's mostly US company. I don't think they've got a presence in the UK at the moment, but they've launched an AI assistant. And what's really interesting about this news is that the assistant, the AI bot, is the primary way that you interact with the accounting software. So rather than having a login and a dashboard and a sales area and a reports area, you just chat to the bot instead. And so building on what we were talking about AI a minute ago, I think what we'll see is that it actually becomes a form factor for software as opposed to a product in its own right. So where we've gone desktop cloud, we'll now go cloud AI. So rather than log into a dashboard, we'll have a bot interact with us. I think the threat for that for anyone is probably more in the internal financial controller, because some of the stuff that Digits are saying you can ask about would be the things that you would just send a Slack message to your financial controller or your finance team. You go, look, how are we doing? What's in the bank? What invoices are outstanding or whatever. But I think it should be noteworthy for accounting firms just because it's things nipping at the heels, like John, you were saying a second ago. It's just this constant encroachment of stuff that accountants could do now can be done by AI. And it's certainly not as well, not as good, but you're not dealing with what's factually as good. You're dealing with what people's perceptions are as good as. So if people think it's as good, then their behavior will mean that they'll use it, whether it actually is or not. So that's where the threat comes from, I think. And it comes back to what you're saying around education and highlighting to people that maybe these things aren't as good as an expert piece of advice. So yeah, really interesting. What do you guys think of this?
Given my experience of AI assistants, I would say I am...
Is that Indy? You're talking about Indy now.
Never. She's pure human. I'm still unsure if you're a robot or not. But I think that I wouldn't want to interact with it at all. I normally find that they take me down a path where I have to ask lots of questions to get me to the point where a human would know instantly. And it's still frustrating. I think I've got quite a way to go. And if that's the only way I can interact with it, that's actually put me off interacting with Digits. But I'm not a skeptical person. But I'm kind of fed up with this AI talk. So I'm going to talk about something else now. I'm going to move us away from AI. And it's a small bit, but Intuit have released QuickBooks payments into the UK. I think we talked about this a little while ago and what they were trying to do. But they've now embedded this into the invoices so you can receive via card or bank transfer money directly into your bank via QuickBooks embedded, paying off your invoice, which they've had in the US for a while, I believe, anyway. Little win, and something that I guess even with Intuit focusing very heavily on AI agents, they're bringing out other functionality that's beneficial for any UK users.
So quick question, and that's an embedded product for Intuit. So have they replaced like some of the pre-existing payment providers that were already there?
Everything they're talking about is, when like Xero have done this, they go, oh, it's powered by.
Yeah.
They've not talked about anything being powered by. Now, maybe it is hidden underneath somewhere. Mm-hmm. And I know the likes of Cresco, for example, are trying to use their platform to power a lot of tools. Yes. And maybe over time we'll find that there is a tool that's powering this in a similar way that QuickBooks Payroll is powered by Employment Hero to some extent. But they don't talk about it because it's kind of like white labeled. So we may find there is a product underneath that doing it. But if it was, I guess, something where they've got a historic partnership, I would expect them to refer to that, and they haven't done this in the announcement.
And I guess the other question then is that the default setting? So if you had a Cresco or an Adfin connected in already, do you now default to Intuit and you don't use the other products? Because that's one of the things that Intuit tend to do, isn't it? It's a sort of once they've kind of built their kind of own product, they kind of just tend to close that area of the product away from anyone else kind of coming in from a third party.
Yeah, I don't think it's mandated yet, but my assumption would be that they market this. So they market their own one heavily. They hide, I guess, the other options that you've got. And then over time, they will cut that off. That's, as you say, their normal path. They've not, unsurprisingly, mentioned this at this stage, but we've seen kind of the route they go down.
Nice.
On a QuickBooks promo, they also announced a whole host of enhancements and improvements to their product. So across the board, actually, so there's MTD, there's MailChimp, there's things within the new command center for the Intuit accountant.
I like that term.
There's an Intuit account suite, actually. So lots of things in terms of like the enhanced interface. And so I guess it's, again, just improving user experience overall. Things like consolidating the client management, optimizing performance, AI-powered client insights, which is in beta at the moment. They've also launched something else, which is a books close at scale for customizable review templates, progress tracking, and smoother client delivery. Again, nice. And overall, they've got some changes to the MTD for income tax experience as well, clearer category mapping, things like instant income tax calculations, and seamless tax return account access. So there's things in MailChimp that has been all over my TV at the moment. I feel like I keep on seeing it all the time. So it's good to see them promoting it a little bit more than before, because it felt like they had acquired MailChimp and it had all gone really silent. But now they're doing a lot more with MailChimp as well in terms of, I guess, the additional data analytics, the enhanced Shopify integration as well for those that use those e-commerce platforms. And want to make sure that they've got more personalized emails going out to the customer base, which are really great for ROI. I always appreciate some e-commerce site that's remembered what I've done, what I bought, and maybe found something similar I'd like to buy. Why not? It's Christmas. And upgraded analytics and reporting. So overall, a whole host of different changes made to the software. And then there's also a new app partner program that they've launched as well. So you get some clear partner badges that are structured as silver, gold, and platinum tiers, so you can instantly spot the best apps to help you run your business.
I think out of all of what you mentioned, what I really like the idea of is that they reimagined how QuickBooks Now Intuit looks as a platform, and they've kind of duplicated that for the accountant side. So you've got one, I guess, seamless view. You interact through all of your or get to all your clients through something that looks and feels very similar to how you'd be logging into individual clients' accounts. And I think that is probably needed more than anything else, given it was quite an abrupt and dramatic shift in how it looks and feels. Has anyone been on the QuickBooks system?
I haven't been on it, but I did see it in the last couple of weeks when I've been in the US, and it's completely transformed, like you say. It's in fact it's quite a stark contrast between what you're probably familiar with if you've been using old version of QuickBooks, as it were, and seeing the new version. But it's good that you've kind of just get everything in one place. I do quite like that. For all of the misgivings I had about some of the things that Intuit were doing, it is really neat just to be able to sort of hop between products.
They do reduce the noise, don't they? The mental noise by doing that. Then you're not trying to adjust.
Yeah, and it's designed to be AI-led. So in the same way that Lee was talking about that chatbot to some extent, right? AI-powered chatbot in digits, that's how they're kind of looking at it from an Intuit perspective. We've got the agents. How do we empower or make it really easy for the users to interact with the agents? I will say that I still couldn't find anything I wanted in the Intuit platform, but that's probably a me problem rather than an Intuit platform.
You need to open your eyes.
Yeah.
You should have interacted with the bot a bit more.
Yes,
well, that was probably
exactly.
it. I just didn't want to.
You didn't prompt it right.
No.
So despite your best efforts to drag us away from AI, Ryan, we found our way back to it. And I've now got a story with a Briefcase who've absorbed what appears to be most of the tax code, certainly around the VAT guidance, as a way to make sure that they're confirming transactions properly and things are being treated in the right way in there. I think that's a really, really interesting move. And it goes back to my earlier point around when you're a challenger in a market, you can do some more radical things, because I think if Xero or Dex tried to do this, then a lot of their accounting partners would see that as them overstepping a little bit. whereas Briefcase can get away with it because they're the challenger. I think it's a really, really interesting move, and I think there's positives for accountants in there when they're working on VAT returns with clients, but then equally you can see that as a threat because now that's work that they aren't doing because the tool has done it. What do you guys think? If you were back in practice, do you think that would be a welcome move for you, having that guidance in there?
I mean, having the guidance in there when you're looking at transactions is really good from a relevance point of view. So I think that helps. The one thing that I think might be challenging for like bookkeepers and accountants in here is like, what happens when Briefcase does something that is kind of like diametrically opposed to kind of like your knowledge and the way that you've been doing something historically, and whether or not you'll accept that. So, you know, a classic example that I see quite often, right, is that a lot of people will code transactions from a non-VAT registered business as zero rated. Now, technically zero rated is not right because it either should be going on as a reverse charge or should be going on as an outside the scope. And so I could imagine that Briefcase might suddenly flag a whole bunch of things like this, which will then sort of send, you know, sort of bookkeepers and accountants potentially sort of into doom spirals where they kind of like then sort of figure out like, what do I do? You know, is this right? And like, do I kind of accept it or not? Or do I just go back to what I've doing? You know, it's a really like niche techie thing that, but and fundamentally it doesn't actually change the numbers on the return, but it does make the calculation accuracy much more reliable. And I guess this is kind of almost meaningless until we maybe get to a point in time in the future where either those transactions are looked at in detail, or maybe if you're working with a partially exempt business or something that's got slightly more complex VAT, that becomes much more relevant in terms of making sure that those allocations are correct.
Right, and then I've got one final bit. Once again, not AI, yes. And this is from Unleash. So they have, I'm going to use the word reimagined their pricing. I changed it. So they've simplified it in some way. They've tried to reduce their, I guess, minimum cost of entry. So they've got two options now they go through, and the base, I guess, fee like on the base tier is cheaper, but you get less in it. And then you have to add on or add bolt-ons as you go. What this does mean is that overall, if you're using the system quite heavily, you may be paying more. It also means that the way they're going to bring in their AI, their new Evo AI engine, may be that if you want to utilize that across multiple products, there may be some charges along with that, and also on volume. So it's very different to what they were doing before, which was very user-driven. This is now on functionality-driven, which I think is a much better way of setting that out. Everything that I've worked with clients before, it's like, what specific functionality do you need? How do we create that for you? Whereas historically, I guess with the Unleash platform, it's more like, how many users do you have? And this is just going to be what the price is. Adds a little bit more complexity in trying to identify and tease out what the price is, but should be more value for each individual business based on how that's structured.
I like that. Actually, that's going to be the future, I think, of most of this SaaS pricing that, you know, we've seen in the past. Feels really unfair when it's very much seat driven. What I think is going to be the future, and I think that's what we've seen with some of the softwares that have come out, is usage driven is going to be the core here. And as you said, more functions that you use, more compute power, more that you should pay. So actually that makes complete sense to me.
Although this does go against them picking up what we started with here, bringing that back to the start, where Xero have kind of bundled their pricing tier, right? They create the package, they kind of wrote things in, and we all went, no, we like it being separate. Well, Unleashed have unbundled, and I much prefer the unbundling. It's, as you summarised, much more eloquently.
It's going to be the future.
I think also worth saying that Unleashed have a lot more competition in the market now than they did a few years ago, and so and quite a lot of that competition is coming in at a lower price. So that you know, whether or not they've reacted directly to that competitive force or not, I don't know. But this is good for them because it means that they can maintain a level of value and still be at a lower cost. And maybe this preempts, because we're still waiting for the inventory product to come into Xero. It's still not here in the UK, still only prevalent in the US. And that will invariably come in at a lower cost as well. So, it's good. I do agree with you. The unbundling is good. The only challenge I have with you, Indy, is like on volume pricing or sort of transaction level pricing. That is actually really difficult for both vendors to kind of predict out in terms of utilization. And it's also really challenging for the consumer of that, whether it's the accountant, bookkeeper, or whether it's the business, to kind of say, oh, well, yeah, I'm going to use, I don't know, 1,200 units this year, or maybe I'm going to use 3,000 units. I don't know. So when you kind of come to volume pricing or transaction type pricing, I do find that's quite challenging, particularly if it's a new product that you're bringing into a business.
Find it challenging now, but let's see, the future
Run by AI.
of models is getting a little bit better.
You may well see that makes accounting channels so complicated to charge and recharge that the default method then becomes the client goes directly to the vendor,
Yeah.
and the accountant is a referrer or has some other interaction with that to mark it as their referral for a revenue attribution purpose for the vendor. But then it just sort of sidesteps that recharging issue a bit.
Thank you, everyone, for your wonderful contributions, and hopefully you got some great insights out of the news and the updates and stuff. That wraps up another episode of the Digi-Tools and Accrual World podcast, brought to you by the Digital Disruptors, and of course with our lovely sponsors, Free Agent, this week. And if you do want to reach out to us, we're always wanting your feedback, your thoughts, your ideas. Find us on LinkedIn and all the other channels, YouTube, etc., etc. And don't forget, you can sign up for our newsletter, which goes a little bit more in depth and summarizes some of the other news that we don't always get to cover. If you want to do that, you'll find all the details on the website, and we'd love to hear from you, as I said.